Good morning, everyone. How you guys doing? Getting set up here 1 second. Where can I find up-to-date ETF holdings if I want to see the distribution filings? Fintel? Uh, you can get data from Standard and Poor, but it's really expensive. Each individual fund, if they're big enough, will publish like a master list every day of what stocks are in its like NAV. You have to download it. It's usually like a CSV file. Explain what Dix is and why is it important? It is the utilization of dark pools, um, which commonly is confused with dark pool volume. It's not. It's the amount of the volume that passes through dark pools. The reason it's important is because it infers internalization. The higher the dark pool utilization is, the higher likely internalization is. So you can use it on some stocks as a measure of asymmetric risk in short-term options positioning or short positioning. Illiquid stocks with high short interest or high volatility tend to have more dark pool utilization than liquid stocks with low volatility. Dix take into account European dark pools or just American dark pools? It takes into account any dark pools monitored by FINRA. The data comes from FINRA PMI dump that comes at like 5 p.m. or 6 p.m. every day. I think it's 5 p.m. Technical term is boofing. Yeah, it's the think of it like the amount of boofed volume. Rasmus Sandblom, thank you so much for becoming a Dillionaire, man. Hit me up on the Discord. I'll get you added to the country club shortly after the stream.
Happy birthday, Gert. Yeah. Yeah, we might have a chance, but we ain't got rolls. Give us more than a chance, cause we ain't no cold. Get the cash in advance, cause we hold it the
I'm having an okay weekend, Dominic. I hope yours is great. Mine's been, well, there's been a lot of shit, but I'll be alright. I am aware that Upstart announced a 400 million buyback plan in March, saying that the stock was undervalued and it was at $90 per share back then. Buyback soon? It has not been completed. Good afternoon, Pickleator. Hello, Callum. I was looking at SQQQ, long dated calls, wondering why there isn't much of a change in their pricing throughout the strikes and dates. Donka. Well, I'd have to take a look at that. I'm not sure. Usually, market conditions like this, where we have like really high VIX, can create kind of strange skew on the near term options. So it may be that IV is just very high, and then the further out you look, the more you're paying for theta. But I'm going to take a look right now. Uh, Not sure to what you're referring. I mean, farther dated calls are more money. Isn't much of a change in their pricing throughout the strikes and dates. Maybe you could be more specific on what aspect of their pricing you're referring to. Because they seem, I mean, they seem to be mostly priced normally. I think skews a little off, but yeah, I mean, Ivy's pretty elevated right now compared to the to where it normally is. But S call skews a little off. Extremely heavy call weighting. So, are you looking at the pricing between puts and calls? So puts are more expensive because VIX is up, but calls are more expensive on SQQQ because the call skew is insane. That's like 21.886, which is nuts. Do you pay for TradingView? I do now because of the stream. I used to not, but I need to save so many charts now that I kind of have to pay for it. Dix doesn't really mean much unless internalization overwhelms the system more than what CNS can handle. That depends. Yes and no. Right now, GME is trading like very, very low volume. Like on stocks that are trading very, very low volume, there's not enough volume to net efficiently through CNS, right? So, the more they try to short volatility, the worse CNS gets at its job. So it can actually mean quite a lot. That's on PMCCs for GME and Fubo. They're not bad. I mean, I don't know if I'd sell PMCCs against Fubo just because like the upside range is kind of insane and you'll just probably burn up your leaps at some point. Cover calls are probably better. The stock's super cheap. Um, but you could if you want to just try to like harvest theta against leaps while waiting out like volatility. Um, I don't love them on Fubo, but GME they're fine. I mean, if you want deep in the money leaps on GME, I don't know if you would want those. My plan for PMCCs on Fubo is to wait until it moves up to like $6 or $7, where those $5 leaps that I have right now are kind of nicely in the money, like 0.6 delta. Then I'll start to sell PMCCs against them in order to get capital to exercise them later down the road. You can do the same with GME. We just haven't really hit a low where you're going to buy a leap that's going to consistently stay in the money, right? Like we really need to go like sub $20 for you to pick those up. Unless you want to actually buy them while they're in the money, and they're kind of expensive. On the subject of paying for things, is paying for FinViz a must? I've never paid for FinViz. I know it's not very pricey, but I've also never paid for it. Uh, on the subject of paying for things, nothing is worth paying for except exchange data. And you're not going to get exchange data basically from anywhere. You'll get options flow, or you'll get delayed exchange data. The only thing really worth paying for is live exchange data, and it's just too pricey for most people. I mean, you're talking $12,000 to $18,000 a month. Most of the things I pay for like the stream and for the Discord, are just so I don't have to calculate it myself. Um, and you know, we're working on getting rid of that too, just so we can buy better data instead of throwing our money away on, lackluster APIs that have incorrect math. Is charting SPY on the 5, 15, and 30-second for day trading a good strategy? No, not at all. You don't need tick data. It doesn't give you like a lot of trend information. And even on the 1 minute, you're kind of taking a risk trying to analyze trends. Um it's good for scalping, like the 1 minute. We watch it because it's more fun, but um usually, especially in this low volume environment, you really want to track your trends on the 5. Once you've got a lot of experience, you can move to the 1, and use it the same way you would use the 5, just looking for larger trends. You just have like 5 times the number of candlesticks, right? It's not that bad, but you need to like zoom out more on the 1 minute, and you can't use like multi-day trends, which is can be annoying. I'm looking at the call prices, but they all seem to be 3,000-ish a contract. Thanks again. Um, okay, so I'm not seeing that at all. Like October $60 contracts are $3.15. I don't know, maybe there's like a pricing issue on your brokerage. Um, I mean, even like Jan 23s are like $12 a contract at the money. In the money like 12.50. So I mean, the pricing seems, I mean, it's high, but it's pretty normalized. You know what actually looks really attractive on SQQQ is like short strangles, like selling covered short strangles, like out of the money CSP, out of the money covered call. Hmm. Yeah, I don't hate those. They're kind of nice. I'll have to do the math on those later, but that doesn't seem bad, especially on the weeklies. Ooh, pretty nice. Yeah, I'll think about that. Sorry, I don't think I understood your stance on the Upstart buyback. Any theories on when they might start, at what prices? I mean, they could start at any time. There's no way to tell, right? It's like a corporate action. But they haven't announced that it's completed. I think their last earnings report covers what they've bought back so far, and it's not a lot. So they definitely still have some money on the sidelines to buy more. I'm surprised they haven't bought it at $20, but maybe they are buying it at $20. Um, there's really no way to tell, though, right? And buybacks are also like a hedge against like bad earnings. So maybe they're waiting till they feel like they're gonna have a decline in earnings, like probably for them, probably later next year into early 2024. Yeah, those buybacks can sit on the back burner for a long period of time, right? Because they want to use them when they're most beneficial. High Dick's good. Low Gex also good. No, low Gex is bad. Our Gex is fairly low for GME, but that's just because options interest is kind of low. It's not terrible. I mean, it's still like $6 million per dollar, so it's not the worst it's been recently. It's getting better. Like I said, it's taking time, but we're seeing short vol positions scale back in. I can't use WeBull for compliance reasons. Okay. My choices are TD, Fidelity, LPL, and Schwab. I'm currently using TD, Fidelity, and LPL. Am I missing anything at Schwab? No. Schwab's a little fast and loose with the margin, but I think TDA also is. So you're probably fine. Can you go into more detail on what you're seeing on Upstart and what you think could play out over the next few months? I'm seeing a great deal of effort being placed into preventing a hedge flip on Upstart, while attempting to short the price of the stock and keep it in this, like very low $20 range. Um, as you can see here, I mean they've put in quite a lot of effort already, keeping it in this range since this massive sell off here after earnings. They've really been trying to grind the price down. Unfortunately, now it's on Reg Show and has been on Reg Show, right? So the advantage of this, everyone always gets all worked up over Reg Show, and on ETFs, Reg Show doesn't really mean anything. But on an individual stock like this, when it moves into that Rule 204 settlement, where they are forced closing FTDs, it becomes very difficult to short, right? If they turn to the lending pool, the borrow rate or cost to borrow will rocket, right? They don't want that. And they need a pre-borrow agreement anyway to go to the lending pool, which means they need to force a locate, which is obviously something they don't want to do on something that they've overshorted, right? And so the options are ETFs and, well, options. So you can either get the AP to short, or the AP does short, or you get the MM to short, right? Because these are the two entities that have synthetic liquidity provisions. By going to these, though, you create obligations, right? These positions fail to locate. They're synthetic, right? And so over time, this builds up large numbers of obligations for either through future contracts written to ETFs, or it builds up large amounts of obligations due to the market maker in the form of FTDs, right? Either way, uh, there's got to be a give for all the take, I guess, is the easy. You create a lot of asymmetric risk in the position. You have divergent tails, and when those divergent tails collapse, you get all that volume back, right? Because you're creating an extremely illiquid environment. That environment must become liquid at some point. And when that liquidity comes in, you get a large amount of upside potential. I wrote a whole DD about this, which I still feel like no one's read. Or maybe no one understands and needs to read again and again and again until they get it. Get us all pumped up for how rich Rev can make us. Oh, it could make us very rich, or just kick us in the teeth. It's either one at this point. I'm resigned to whatever fate may come. Hey Girk, happy weekend. Do you have any expectations on Rev being hit hard going into the hearing on Thursday? You know, it'd be really fucking stupid for them to double down on their shorts going into a hearing, unless they know something. It'd be smarter for them to cover some of them in advance of the hearing. Is there a ratio of dicks to deviation from the average volume? Whereabouts it starts to get compelling? No, the higher the better. Sustained periods of extremely elevated dark pool utilization are nice, I guess. Can we talk about SPX? Yeah, yeah, we can. Where do you see peak of the bear rally? Would it continue after October OPEX? I want to start building 90 DTE for SPY puts. Hmm. I don't know. The bear rally still hasn't really started. Like we've got a bounce and we've got maybe a higher low after Friday. We're gonna see more and more put capitulation uh, for the long term puts. Most of which are expiring on October OPEX. I wouldn't say that the peak of the rally would be OPEX. I would say it would be after OPEX. Probably a bit after OPEX. There's still some really big macroeconomic data we're waiting on in PPI and CPI. And I don't think anyone's going to reposition too hard until that's out, until that's like a known quantity. You know, I think we're gonna mostly stay in this like 3,600 to 3,700 range. If CPI and PPI are decent or improving, that could be very bullish, and then we could start to see, you know, call interest pick up until the next Fed rate increase or next massive economic catastrophe that comes in. But don't forget, you know, we also have big mega caps pulling back earnings. I would say almost earlier than I expected. It's in line with my expectations. Um, you know, they're pulling them back in leading announcements. They're not obviously filing earnings with, you know, reduced margins yet. Like AMD's announcement is in advance of their earnings. So they're really trying to get out ahead of those big pullbacks. But you know, I still think across the broader market, you know, outside of semiconductors and stuff, we're going to see those earning potential get pulled back over the next still like 2 quarters into early next year. But the more and more that happens, the worse and worse it is for the market, and it is starting now. So you know, what do we have, like, you know, 2 months left in this year, 3 months left before, you know, we could potentially start to see a bottom or moving towards a bottom in the market. So I mean, it's probably not even bad to start getting, you know, some farther dated out of the money SPX positions. But I would DCA into them very slowly because, you know, opportunities to get them cheaper on a small rally would obviously be a lot better. I mean, if they're gonna go in the money, does it matter if you paid a little extra for them, right? Like if you're buying like 3650s right now and you're targeting 3300 by January, does it matter if you paid, you know, $2,000 more for it up front? If you're getting a bigger position, you know, you really have a lot of opportunities just to keep DCAing, you know, whatever 90 DTE, or I would probably do 120, but whatever position you do enter, you know, you're going to have a lot of time to DCA it. You might have to hold it underwater, but I mean, anything that long you would expect to at some point. Mm. It's not out of the money puts, it's in the money puts. They buy tons of in the money puts. In the money puts forces the market maker to use their liquidity provisions to short the stock. Because the market makers short puts, right? And it skews their gamma negative, which prevents the hedge from flipping. So the market maker doesn't deleverage their hedge, and they keep, so they're selling into dropping pressure. So you could, what it does is it advantages the shorts already being used, right? Because every time you buy an in the money put, when the net negative gamma, or gamma is net negative, you get kind of an acceleration effect, right? So say you buy a 0.7 delta put, right? The market maker is going to go out and short 70 shares, but then because net gamma is net negative, they're also going to hedge by selling shares, right? So into the dropping price, they sell shares, right? So maybe then the market maker is going to sell like an additional like 16 shares into the market to hedge like their broader position, right? It's a lot more than this, but this is an example. I mean, obviously these are being bought in massive quantities, but so by keeping the market maker net negative gamma, they continue to add strength to the in the money put positions that they're buying in order to keep the market maker net negative gamma. Because, if the hedge flips and we cross the, like the gamma flip point, then the market maker is going to switch their hedge, right? And they're going to start selling into rising prices and buying into dropping prices. Which stabilizes the stock and gives it more upside potential because they start deleveraging that net negative delta. Sorry, I lost my spot here. Okay. Where do you see the peak of the bear rally run? Okay, I covered that. Upstart, have solid gamma ramp. I mean, Upstart's okay. It's got plenty of call interest. I wouldn't say it has like a gamma ramp, but I don't know if you'd care at this point. Like one can come in at any period, right? But yeah, I mean, Kalski is not super high on it. It's got plenty of open contracts if it starts to run. Gamma Max is really high on Upstart, like in the 70s. So a lot of potential if it does start running. Was Overstock on RegShare for 2 years because it's had such a huge float? So was still liquid even with 5% of the float shorted daily. I mean, Upstock was on RegShare, Overstock was on RegShare for 2 years because they simply didn't close the short position, right? If you have a naked short position open, and it's failing, say you're now like 1.2 million shares short, and you're failing, 400,000 of those a day, right? You're just like it's just gonna perpetually stay on RegShare forever, right? If you never close that short position, it could stay on indefinitely. You have to find 400,000 shares every day, but that's it, right? And yeah, obviously that's a lot easier if something's very liquid and has a large float. I mean, they're absolutely biased, right? It's a private hearing. I mean, they have their own, rules and regulations internally that they're going to adhere to, but I don't think there's any guarantee that it's like fair or just, right? It's just whatever they decide, kind of. You posted some stuff about puts closing out. That was actually puts being opened. If you look at the thing I posted on the Discord on SPX, there was a massive drop in call skew. SPX's call skew has been negative all year. But on October 4th, it dropped like 4 sigma from where it's usually at. So somebody sold off a shitload of calls and bought a shitload of puts like the day before the peak of the rally. And immediately when we drop, we see call skew start to pick back up again, right? Which means they closed their puts and started opening calls. But it was a huge move, like billions of dollars, easily billions of dollars. One of the largest moves I've ever seen in on SPX, actually. That might be the largest move I've ever seen on SPX as far as call skew goes. Upstart at 20 gives you the same tingles that I got when I bought Bobby at 5 back in July. What's also really cool on Upstart is puts are very expensive, and it does seem to have found a very strong floor here at 20. So there's a lot of opportunity to like leverage premium from puts into long call positions, which I've been doing quite a bit. Selling $20 call or $20 puts and using that to buy, farther dated calls. And that way the short leg of the position falls off really fast. And I get these like risk-free long positions. You can also, do things like sell deep in the money calls, which are worth quite a lot as well. And then use that to like double leverage long positions. So you're just, I mean, it does make you super, super long the stock, but it's kind of fun. I think I posted that strategy in there as well. Like a call ratio back spread is what they're called. I think I could show it to you guys for Upstart. Um, let's see here. They're gonna open. So something like this, where if the price and volatility move up, you have this narrow range at close. Probably better with like 30s, but and then if the price moves up, obviously you just profit on the long side, but you're selling a 1250C in the money and using it to buy 2 out of the money calls. I think here at 20, that's a debit, so 2250. It's a really narrow range, right? Like, so you only take a loss if the contracts end between 31 and $18. So as long as the price is above or below that, you don't take a loss. And obviously, you know, if it moves up a lot, it can get pretty crazy because you have that double leverage on the long side. Those are fun. But there's a lot of fun stuff you can do with the options on Upstart. What do you expect CPI and PPI to be? I think we'll see a slight pullback in CPI. I don't really have any expectations for PPI. Probably just like the forecasted. I don't have enough like manufacturer data to really get an assessment of that. So you know, usually what I'll do with PPI is just like find a few different like forecasts and read through them and see kind of which ones I like best. For people that pay way more attention to that than I do. For core inflation, I'm thinking we'll see like a 0.1 or 0.2 increase. I don't think we'll see another 0.4 jump. If we do, it's going to be extremely bearish, right? So think of it this way. PPI at 0, 1, or 2, really bullish. Or well, scaling. And then CPI at 0.3, 4, 5, extremely bearish. That's going to mean that the Fed needs to be more aggressive with their rates. It's going to neuter any potential of you know, a pullback in rates into the end of the year. They're going to target a faster aggressive rate, maybe even moving to an aggressive rate before the end of 2023. So ideally, you know, we see a slowdown in that, and the acceleration in core inflation, you know, last month was just one data point and not deterministic of a longer term trend of rapidly accelerating core inflation. If we do have a longer term trend of rapidly accelerating core inflation, we could see a market crash before the end of the year. Is Pimento of Destiny still bullish? I mean, it's not bullish or bearish, right? It's just what it is. Right? It's you know, we're moving into an area where, you know, theta is starting to hurt the short positions. Obviously price isn't, right? We haven't risen up into the, you know, if you look, if think of it like this is price weighted, or well, you know, this is probably off. Let me not use this. I just use this. So, you know, up here we have price. Down here we have theta. You know, the shorts need to capitulate to one or the other unless they can get it. The price of the market falls down below the trend, right? You know, once those like 3,600 puts start to fall into the money, and then, you know, 3550s, it gets really bad, right? And then we can move down into like the 3480 range. We don't want to see this, obviously. We do want to see put capitulation as we move towards, you know, the outer edge of this. You know, even if we stay in this channel for like the next week or so, you know, puts are going to have to start to sell off at some point, right? And that's going to give us more upside potential. Or, if the price goes high enough, then puts also have to sell off. We came very close here, right? We get very close to getting those like 3,800 puts to sell off. Thank you so much, Dan. I appreciate it, man. Thank you. So I'm full ported Rev and down bad. Oh, Jesus. But still got hope. GME came to me in a dream, and I'm unsure if I should full port November calls on Monday and realize the loss on Rev. Any advice for fellow Centaur? I mean, so GME's, as most of you know, and I posted it on the Discord, GME's dark pool utilization's been spiking, which means they've been internalizing a lot. And all of last week, they were buying, shitloads of puts to keep us from rising with the market, right? To make sure that, like we talked about earlier, that hedge remains net negative gamma. Those puts sold off, which causes, the gamma flip point to move up, but also, uncompresses all that long side gamma. And so you see like a massive flip from, really bearish last week to really bullish going into this week. And we have all this gamma weight ready to pull us up. Usually, if they're covering ETF FTDs or they have something to cover, they kind of let go of the hedge and let it run, right? So we have some potential, but it's hard to say how much, right? Like ETF FTDs are fairly low and well spread out. We do have XRT's first day of forced settlement, and that's kind of an unknown quantity of FTDs because we don't have an FTD report for that period. So that could be pretty explosive. But remember, our gamma max is only at 35. So the potential is right? Like we can move up $10. And it's great for covered calls and stuff. I don't know if it's worth taking a loss right before the entire reason you're in Rev, but I will say that Rev is, super risky, and there's a chance that you could lose everything you put into it or a large chunk of what you put into it. We've discussed this all along. It's mostly a volatility play. There's a chance it could short squeeze a little bit, or shorts could get squeezed out of it, and it could, if it got momentum and picked up institutional interest, yeah, it could do some crazy stuff, but it may not, right? And like that's something that you need to know when you're assessing your risk on it, because it may just do nothing. It could get delisted. Shorts will close out their positions in OTC with minimal effect on the price and no locates. So yeah, it's up to you, man. I mean, there's definitely risk in Revlon, but there's, not, GME's not that great right now. I do think, like, at some point in the next 90 days, one of our OPEXs is going to be very, very nice. I don't know if it's going to be October or November. Illiquidity in GME right now is the highest it's ever been. Ever. So, when that liquidity comes back, it'll be very, very interesting. Can't you use a fib speed fan? No, those are garbage. On Discord, you said selling SPX spreads daily can be good for consistent 2 to 3% income. No, buying spreads, and you still have to pick the direction correctly. You definitely don't want to sell short strangles on the SPX while it's this volatile. If you do, you're not gonna make, like, if you sell them in a safe range, you're not gonna make any money. And you're picking like bullish or bearish spreads on SPX, and the reason you're doing that is you're limiting your potential losses, but you're also capping your potential gains. So you still have to pick the right direction, unless you do like a bear call spread and a bull put spread simultaneously. Nothing about what has been said so far makes me bullish for the near term, which is what my calls need. Big sad. I mean, we have a lot of puts that closed out Friday, and if CPI data comes in good, the market's gonna rally. Like, quick capitulation will be almost instantaneous, right? I mean, how much time do you have on your calls? I know yours were kind of shorter, but I thought you made a bunch of money on the initial rally. Did you buy more long calls or roll them out? Could you use a fib speed fan? Okay, whatever that. When is GME likely to hit 40 again? I mean, you need an OPEX run for a move that big. You're talking about almost doubling in price. Price expectations for GME this week. Looking to sell CCs for 1021. I mean, right now it looks like we have very limited potential beyond like $31. We could test Gamma Max, but I think that's really unlikely. If we do, obviously, selling them at Gamma Max is great. Otherwise, not very deep in the money if you're going to sell them in the money, or just slightly out of the money at the peak. And then, yeah, 1021 is probably okay. Nope, fibs are bad. It's just fake. It's made up. They're just, you know what fibs are? Fibs are just inaccurate resistances and supports. That's what they are. They're slightly off, but they're easy for people to understand, so large numbers of people use them. But they're always off. They're always like 3 to 4% off, and that's a lot of money you can lose. That's a lot of slippage, right? So why not just learn to figure out supports and resistances and understand price pressure and theta decay rather than using fucking Fibonacci's like a simpleton. How often do you think there are large changes in OI on mid caps? And would that be a viable trading strategy using CBOE daily OI data for T+2 action? I mean, large changes in OI on mid caps can promulgate price action, but it doesn't have to. And then also remember, lots of positioning is like neutral and has no effect on the price of the underlying. So I don't know what you mean by large changes in OI. Directionally, sure, you could probably play that, but you're already too late. You're getting a delayed update on CBOE data. It's not like you're seeing the OI coming in real time, right? You're the next morning, so everyone's already ahead of you. You think they'll boof it and keep us sub 28? Well, that's the good part about utilization being so high, is there's not a lot of boof potential, right? Their asymmetric risk is already really, really wide. I mean, how much more can they boof to keep us sub 28? I mean, we'll know tomorrow if puts start coming in strong again on the weekly. So, if they're going to try to leverage down, but generally when they drop the hedge like that, they're just going to let it run a little bit. They'll let it burn off, the call chain and then short it again. They want to get some liquidity out of covering those ETF FTDs, right? That sounds great, but what does that mean? Are you expecting ups on SPX in the near term? I mean, in the next 2 weeks. Here's the deal. So the options indicate that the SPX has potential to rally in the next 2 weeks as put positions are forced out due to theta decay, right? The macro conditions could negate that. If CPI comes in strong, down. If it it comes in stronger and we see an increase, beyond the last 0.4 increase, obviously it's going to be bearish, and regardless of the price of puts at that point, more are going to be bought, and we're also going to see sell-offs in the event that happens, right? If CPI comes in fairly normal, those puts have to close, right? So I mean, I'm still mostly bullish on SPX. I have straddles, right? Like you can't just be relying on one direction in the market right now. It's too volatile. You need to play both sides equitably. If you're just gonna bet on the long side, there's obviously risk. If you have, no hedge, nothing, walking. Do you expect upward price action for GME during the yes? Would you sell CCs at the high at the top this week with expiration on the 21st before OPEX? Probably. Does it make sense to create a dedicated Discord channel? We have one. I don't know how big interest is, but there's already a dedicated Discord channel for Upstart. A public one? No, they just ruin everything. The poors get in there and they get overly bullish on shit and full port all 500 of their dollars into, the play, and come in and sell CCs and kill the IV. Is there a reason the pimento can't be used on every single pickles pick? Yeah. Because there isn't always like a massively there's a $33 billion per dollar put position sitting on SPX, right? That's the reason. It's huge. And the movement of that position is going to cause drastic changes in the underlying index. This is not true for every pick. It's something that's always true, but I don't need to do it for every pick. Not all things are influenced by their options chain. Eventually, we're going to see an improvement in inflation numbers and reduction of rates. Bull market will be in play at that point. Watch out when that happens in the not too distant future. You know how to time that? Just wait till the fucking Fed pulls back the overnight RRP rate. But there's, currency issues, and there's more to it than just that. But yeah. Thanks, Builder Bob. Is it a specific ratio higher than usual? It's not a specific ratio, but the put call ratio on GME had skewed the IV on near term calls down 20 points below farther dated ones. So it was a lot more than average. Put call ratio should be like 1.0 roughly. Anything beyond that is a deviation, right? Leaning bearish or bullish. Are you nibbling into your covered call position on the rise? Probably. I can't sell all of my covered calls at once. I would just kill myself on slippage. Yeah, no problem. Dave's not here, man. The pimento looks bullish. Well, it gets more bullish the further we get into it. I mean, there's still a bit of gradient left before we hit, the point where it gets very bullish, which is after the 14th, when those options become like 72. But remember, they're cash settled. They could technically hold them all the way until the 21st if prices remain low, right? And we just stay in this channel. So you need the price to go up to get in the money puts to close on the SPX. Otherwise, they just cash settle them. They don't care about the theta. The out of the money puts care about the theta, which can drive prices up. But not a lot of puts out of the money on this in this low range, right? Just 3600 and like 3580, 3550. I'm gonna pull most of my money from my account to pay off my student loans before end of year. Can't gamble with money you can't afford to lose, kids. Will paper trade until I have funds to trade cash again. Smart. Yeah, get rid of the debt now. I had a decent chunk in my port and rev, but it caused me too much anxiety. So I exited at break even at 650. Luckily, right before it started dropping, Upstart shares seem more appealing. I had very different plays, but yeah, I mean, Upstart's a lot more reliable, obviously. I don't have a favorite indicator. VWAP? Yeah, just VWAP. Have you talked about something making those puts go in the money? I can go back and find it later. No, I mean bad CPI data. As I grew older, I lost this ability. Oh, fuck off, Stefan. Can I get your thoughts on UAA? Supposedly in the middle of a share buyback, daily chart looks similar to Upstart. I mean, I don't know if the chart looking similar is a big help. Let's see what data I have on this. I mean, I'm not gonna lie, this doesn't look very compelling. It can move up to like 850, but there's not a lot of range, there's not a lot of interest. Skew adjusted gamma is bullish. I mean, maybe like a buy and hold, like just stock and see what happens. And it's cheap. I'd say they're a little bit undervalued. Maybe not significantly. Volatility is crazy high though. Why is IV up so much? Just massive sell-offs one after another. When's their next earnings? November 1st? slight beat there. Bigger beats back here. Hmm. Racking up quite a bit of debt. Sales are down. Yeah, so I think like a lot of retailers, they're kind of weird because they're both a retailer and a manufacturer. Um, I think so the next earnings report could be kind of bullish, like revenue up, but the margins on that revenue are going to be down, right? So it's risky. I probably wouldn't buy options on it. Like the options chain doesn't look very promising. Maybe shares. And then, the only there's a problem there with like the risk from their earnings. Like sure they could beat and the market might see that favorably, but with margins pulling back, it might not, right? So it's kind of a gamble. I don't like it that much. I'm not gonna lie. I think we're seeing the extent of the recession right now, only up from here. I disagree. I still think we have at least 6 months before we see all of it play out. Why isn't Upstart not really known to retail investors like Wall Street Bets yet? I mean, I don't track the same shit most people do, but um Wall Street Bets has played Upstart a lot in the past. I'm sure there's plenty of information out there. Would you entertain a question about iLag? I mean, I don't know anything about the company, but sure. It's super illiquid. Um, it seems to be picking up some volume, but I worry that this is just like a dead cat bounce. I don't know what they do. I'm not even sure if they're like a real company. They were just something that was spiking, like one of the weird, Chinese IPOs. Is VWAP just an anti-slippage level for big players? To some extent, sure. That's not untrue. Byron Sakay, welcome to Dillionaire, man. Thank you so much. Hit me up on the Discord after the stream. I'll get you added to the country club, man. Worth just selling weeklies for pennies since it's too unpredictable. I mean, you can sell them at like 5-ish, just don't sell into OPEX periods. If you're sufficiently out of the money, it might pick up some improvement through ETF FTDs. It actually has like a decent number of FTDs. And on the daily, it's price, or well, this is the 1 hour, but it's price. I don't know why this keeps moving. I've reset this line like 15 times. I mean, it's holding its own. It's starting to turn around. It's very wide coffee. Volumes getting better. Last earnings were good, obviously. So it looks like it's, heading for 550, 650, 8 over time. Obviously, you've seen all the reports and stuff. So, sometimes, Natty, you don't have to have covered calls out. You can wait for better opportunities to sell them instead of just making minimal profits every week and risking your entire position like you did on BBBY. I mean, not a critique, just a comment. What's the time frame for Rev versus Upstart for VWAPs? I don't know. Revlon, you've got the 13th and the 28th, so 3 weeks. Upstart, who knows? I mean, it's on Reg Show, but we don't know when the proverbial dam will break, right? It's gonna break at some point. I want to have calls for it, but I'm buying in like November, December, January for Upstart. And the cost of buying that extra theta is easily offset with the selling of puts. TDCA, please, but premiums are wild, but it's a pharma stock. Oh, Jesus. What are you just selling CSPs on it? TDCA? Oh. That's not real. The Chad account? Chad current contract in front? The Bank of Chad? This is a country. They have not much money. TCDA. Ah, okay. Oh, this looks fun. Oh, I hate shitty pharma stocks. Insiders are selling. That's always super bullish. They're making more than less than $0. Kidney disease is always good money. I like the volume trend. What's on the monthly? Interest is picking up. I mean, are they nearing are they nearing like a trial announcement? That could be exciting. How high do you see interest rates going in 2023? I mean, are you talking like mortgages or the Fed? I don't see the Fed going much above like 5% next year. I'd be surprised if they went that high. They'll probably just hit the aggressive rate, and then if inflation starts to pull back and the housing market collapses, they'll start to pull it back into the middle or end of next year. Thoughts on more spread plays and pickles picks, bear calls, bull puts, etc. Sava one played out nice, even though I missed it. The Sava one played out amazing. 50% return on margin risk was fucking awesome. Although I will admit, it took some balls and me forgetting that I, sold 100 spreads throughout the week to hold on to it. If I'd remembered, I probably would have closed them at some point, like when it ran up to $46. But I was really busy with my SPX positions and completely forgot about them. And then, IV declined and price declined into the end of the week, which left me with some, 100% returns on them, which was great. I could, yeah. The problem I have with it is a lot of people don't know how to manage them, which I noticed this week, especially. People like DMing me like, hey, this is down, what do I do? And I'm like, the position benefits from theta. And I think there's a lot of people that aren't really there yet. I'll try to include some more advanced strategies, noting that they're advanced, but I just worry that people are gonna fuck them up. Heavy resistance at $4. Never mind about iLag. Um, I feel like I looked at it on the monthly, uh, or maybe I didn't. It's got a chance. I mean, I don't know what it's gonna hit, but I guess the biggest problem is I don't really know anything about this company or its stock. I'm not sure anyone does. They make consumer durables. I mean, I hope you make money off it. For straddles on SPY, I don't like them on SPY that much. What factors should be considered to maximize gains while managing risk? For example, if a position was entered on Friday, expiring in 1 week, I mean, you want to see the direction the market takes at open. On a rising market, generally on a straddle, you want to close the losing leg immediately. Capture as much profit as you set your stop, trailing on the winning leg, and then just ride out the up or downside until a turnaround, and then immediately sell. So you want to try to whatever leg is winning, you want to try to maximize profits on. Obviously, the better you are at following a trend and setting stops, the more money you'll make off them. But when the market's moving up 200 points every day or down 200 points every day, it's really easy to just set straddles and capture profits without doing a lot of thinking. Whereabouts you are 100% transparent on growing a relatively small account for Dillionaires, or maybe can be unlocked for Cornichons. We were kind of talking about doing something like that this week, like taking like a 5K account and not like a race, just growing it, right? Like when you try to set a time limit on it, the odds of success are way lower. But I was thinking about doing one where I just like open up like a 5K account and slowly over time build it and see how much time slowly I can turn it into 25K, I guess would be the target. Show people the value of compounding gains, right? That's a good thing to teach people. It's safe to sell GME CSP for 1014, like around 0.23 delta. No. I wouldn't. If there's a large amount of covering in the early part of the week and CPI hits nasty, on like, what is it, Thursday, that could be really terrible. I mean, it's like unless you want to buy shares at 0.2 or 3 delta, which is what, like 24. 24 to 23. Yeah, 24, 23. The overall bearishness of the market can be depressing, but I remind myself we already dropped from 112 from SPY's peak and we're surviving. Hopefully there won't be another $100 drop to go. Not to toot my own horn, which I love to do, but Pickle's picks are definitely way the fuck up on the year over the market. So I love the fucking bear market. The volatility is awesome. There's money to be made everywhere. Who cares what direction it's moving? As long as it's moving, right? That's what traders care about. We just don't want a stagnant market. That's a nightmare. The stress of swings is hard. Why don't you just sell CSPs instead of selling CCs? Like, if you want to harvest theta every week, Fubo's marginable, right? I mean, you could just sell CSPs at like prices you're either very okay with buying at, and then you don't have that stress of losing your shares every week. I know you're trying to maximize profits, but I mean, like, is Fubo really the best stock to be trying to like strangle? You can make a lot more money strangling other shit. I mean, I understand it's the one you're paying attention to, and a strangle's fine on it, but you're selling them right at the money. Like you're playing into the greed a little bit too much, right? You're like, I'm gonna sell, $4 calls and $4 CSPs and hope to kill it on both. But it's trading in a range where it's very likely to cross that threshold almost all the time. I hate speculation. I don't hate mining, but I don't like speculators. They're always just a scam. SDRC. I'll check them out. Uh, this is an insurance company. They're doing terribly. They picked the wrong stock. Is it this? Sydney, the OTC one? Oh, okay. This is it. Uh, yeah, this is a fucking exploration company. It looks like garbage. It's a garbage penny stock. I don't know what it's gonna do. I hope you bought it back here. How do people buy stuff like this? Do you think you're gonna make $1 million on some Australian? Are they Australian? Idaho gold and silver exploration. They're more likely to find potatoes. This looks like a potato. Just wondering, because if it's a binary event, do these stocks tank if trials are bad? Yeah, absolutely. It's very hit or miss, and usually you have to wait forever. Like you just like here's why I don't like bio. So you try to buy lows, right? Like when they're over short, and then you just bag hold until something happens. And yeah, the thing that happens is just it's either up or down, right? It's just a like you said, a binary event. And so you have to have like broad exposure because obviously you want the binary events to go in your favor more often. So you have to own a bunch of shitty bio stocks that you're waiting to moon. Uh and after all is said and done, say you buy into a basket of 10 bio stocks, 3 of them hit, 7 miss. By the time you collect all your profits, you're probably maybe a little better than break even, unless you really understand FDA trials or have inside information on the company. It's always just a big gamble. And I refuse to believe that the majority of people are walking away from bio plays profitable. Oh, also, at which point the price of the stock runs, they generally release a lot of shares because they're all always broke. So they immediately liquidate their stock. Because they're like, oh, look, we did it, guys. Liquidate, right? Because now they need money for the next round of testing because it's so expensive. People using margin had to ask about theta. I mean, Robinhood gives you that shit right when you sign up. All my realtor friends think that the housing market is barely having a temporary pullback. Yeah, I wouldn't go to realtors for an assessment of the housing market, right? People are always bullish on the thing that they're invested in, and that's their career, right? So they even if they did notice trends, they would ignore them because of bias, right? No, we're not buying paper chads or investing in the Bank of Chad. I found learning with spreads to be safer and help me rebuild my port. I mean, it is, right? Because your loss is minimized. God save Pickles Pigs. The memes were more fun in the bull market. Yeah, whatever. I mean, it's kind of cool. We lose a lot of noise in the bear market, right? A lot of people are out in a bear market, and so I actually like the stream kind of where it's at, like 1,000 people at a time. I mean, it's more than that in and out every day, but like the smaller size lends to better conversations, and I enjoy that. Instead of me just getting pissed off at super stonkers. Becoming a Dillionaire and using Pickles Picks was the best investment I've ever made. Thanks, Dave the Schmiv. Thoughts on timing when Upstart starts to move up? I don't know. ETF FTDs could be interesting. Its primary ETF was reg showed right around the same time it was. Um, it was taken off reg show, but not an ETF that's commonly on reg show. So that's kind of, and also, you know, them both being put on reg show at the same time is very interesting. Same day. But we'll see. I mean, I think OPEX could be really interesting. Obviously, like if they're using ETFs to skirt obligations, that makes OPEX as important for the stock, and they traditionally haven't been. So there's some potential there too. Son of Ricky, welcome to Dillionaire, man. Thank you so much.
Happy birthday, Gert. Yeah. Yeah, we might have a chance, but
Hit me up on the Discord, man. I'll get you added after the stream. You're getting a lot of new members today. I guess, yeah, like 3 or 4 today. That's super cool. Thank you, guys. Any thoughts on UNH? Looking to go long, short, mid 2023. Right. Long, short. I would start earlier in 2023. Puts are, if you're building like an actual short position, I would start earlier in DCA. And healthcare in a recession, you're sure that's what you want to target? I mean, don't get me wrong, you could have a pullback, but your opportunity to get out might be short lived. There's plenty of room to the downside. I don't disagree with you. this is a pickles pick actually right now. But I'm playing like a shorter term downside into like early January, and I'm really not talking about it for a couple months. But um, I don't know about late into the year, and I would you could DM me if you want to talk more about like the positioning on it. But I do have some thoughts. It's tricky because they are a little bit undervalued right now already. The pullback in July uh, kind of reset their price action. I was gonna short it after that earnings, and then it didn't come in very good. So, or at least not for the short position. And then it sold off anyway a bit, so I missed the drop. But yeah, I was targeting like early, like Q1 2023. But yeah, if you want to DM me about it, we could talk more on it. All my CSP money got put into shares. I'm way too over leveraged. The $4 is hopefully to get assigned at some point and sell lower strikes. I'm 100% Fubo shares. Average 374. Rather have some in CSP, but you have margin, right? Because you have all the Fubo shares, so you could sell naked puts. I mean, yeah. So you're trying to get assigned on part of your positions. You're wheeling. It sounds like you're trying to wheel part of it. Then yeah, continue aggressively selling covered calls, right? On whatever part of your position you're aggressively selling them on. If you have like a part of that position that's purely for income generation, then continue to generate income with it. But don't sell like your whole position if you don't want to lose all of it at the same strike, right? Because if you do that and there is upside on the thing you're bullish on, which there likely will be, right? Then then you're just gonna lose your whole position, miss out on the upside, and get burned. So maybe diversify the calls you're selling. Sell part of the position aggressively. Sell the other position kind of passively, just for the other part passively, just for income. That's like I'll sell GME like 0.05 delta calls just to like grab some free money. I don't talk about it, but because it's boring as shit. But they're always kind of getting sold because I know they'll never get assigned, right? Where do you find DNG and GM data? Is it real time? We calculate it, and no, it's based on opening and closing OI data. Changes throughout the intraday. Um, but we pull the data directly from CBOE. It's expensive as shit, but worth it. And then give it to you guys for some stocks. On the 5K account you're thinking about, would you be trading vertical option spreads? I know you're not really a fan, but I think it would be extremely helpful to watch. More fun than buy right. Maybe we'll see. I'd have to think of like the strategy I'd want to use. It's a bear market, so with the volatility, buy rights might not be like starting with a wheel or something might not be ideal. I'd imagine it'd be a margin account, so I'd initially start it with like CSPs on some sort of core position, right? Well, not SPX, but I'd have to find something. You think KMB could go much lower? Based on the chart, TA not financials, obviously. Boomer Dad sold at 140, looking to get back in. KMB. Really Clark. Ooh, rough. Maybe DCA in the I mean, the current range down to like 107. I guess that would depend on the time horizon. 107 to 103. So here, does that help? So, you know, this range, this is about an 11% range with obviously buying more is stronger into the lower part of the range. Hope that helps. Nathan Jennings, thank you so much, man. If you want, hit me up on the Discord, and I'll get you added to the country club after the stream. I appreciate it, man.
Happy birthday, Gert. Yeah. Yeah, we might have a chance, but we ain't got roll.
I'm not above trading with insider information. Just slide into my DMs for a hug, some hot tea if anyone wants to share. Yeah, no problem, David P. Nathan, got that. Appreciate it, man. Realtors are glorified car models. Showed me so much that was not what I described that I was looking for. Ended up doing a private purchase. Golden time of the stream was last year. I missed 510 so much. I mean, it's still there. There's still a lot of us there. Some have left. I mean, that's the nature of the markets, right? You can't expect everyone to want to do this forever, right? We'll hit bear rallies and people will come back. You'll see. They do, right? Like we hit the rally the other day and like viewers went back up to like 1600 like that. So a lot of people are just cash right now, right? And people don't like to play the bear market. They don't like to be short. They don't like to feel sad. It's fine. We'll just make money, right? Your stream equals reverse trolling for RSS. They can't resist it and trickle in. It's more entertaining than anything on TV. Do you have any thoughts on meta? From a historical PE, it looks pretty good, but definitely a whipping boy right now. I hate it. I hate it. I think they're losing. I think they're losing ground in every aspect of their business. I think they're getting their asses kicked by TikTok. The younger generation just doesn't like Facebook, and Instagram's just not doing as well as it was. Right? Yeah, I just don't see a bright future for Meta. Don't get me wrong; they have a shitload of money. They can pivot. They can do other things. Uh, a lot could change, but I'm not really. It's not in my top 10 list of stocks I want to buy in a market crash. I'll tell you that much. I'm returned from Wendy's, not new. For shame. It's okay. Everyone's got to make a trip to Wendy's once in a while. My returns are 40% year to date since joining Cornishon. Fuck you, bipolar bear. Also, change your name back. Honestly, this is the best stock finance analysis anywhere. Fight me. And I like to think it's pretty good. At least I'm upfront about what I think will happen, which I think you don't get from most sources. Sources in the know don't tell people shit that's useful. And then most other, not everyone, but most other people are just fucking idiots. So it's really hard to find good information or data. You ever end up making that chili? No. No, I was going to. I didn't. I think I might make a beef stew tonight. I picked up a can of stout and I'm thinking about making a stew. Yeah, some people are broke too. Rev is gonna make us all rich or broke. Yeah. In a year or two? No, I think we'll start to see I think the bottom of the housing market's gonna come in a lot faster this time than it did in '08. I think we see near the bottom of the housing market before we see a rate pullback. And the real bottom will probably be realized at some point, like into the latter half of next year. So not even a year from now at this point. Just joined. Does anyone ask the most important question? When haircut? Looks like someone pulled a Kenny and FTD'd. I had an appointment for Friday and I didn't go. It was just like too late in the day and I was tired. I don't know. I'm excited for Rev on the 13th. I'm ready for Sideways, baby. I hope not. I just don't want to listen to it, right? It's not that I hope not because I care about making the money. I just hope not because I don't want to listen to people crying. It's the worst. Are you bald? Not at all. I wear hats all the time too, but I'm not bald. So everyone is surprised when I take my hat off and see that I have a full head of hair. I'm just wondering if you are. No, I've got like a lot of hair, like a shitload of it. Way too much. Bullish on Pi-Fi stream in the metaverse with the Gurk me. Thanks, Sisyphus. Good afternoon, mister. Oh, wow. Very formal. Thoughts on SPY SPX pulling back during SLD? Or is it too early with economic data still looming? Thanks. I mean, usually it pulls back regardless of how bullish the economic data is, right? Especially if they're repositioning to the long side and they want more margin to buy more calls or more margin to reposition into their shorts, right? So I think basically almost no matter what, there's some like 200 BPS pullback. I think we only have one time there was an exception to that. It's not always very long lived, which we've dealt with recently, but it usually happens. The problem is we don't know when it'll happen. The week of SLD, we've seen the pullback happen right before SLD starts. We've seen it pull back during. We've seen it pull back in the latter part into like the following Monday. Um, so I guess as long as you're positioned for the drop, you're okay. But remember, it doesn't have to be huge, like especially in this market where 200 BPS moves are commonplace. Before, it was rare to see a 200 BPS move in the market, up 7 4 in the like up 74 points in a day or 100 points in a day. But down 50 was like a shitty red day. But now it's like down 300 is a shitty red day, and up 600 is a good day. Thinking of writing Upstart in the money 25 CSV leap Jan 23 using premium to buy calls. Is the better strategy the same date plus strike, or calls near in the money near dated November, which is better for a small bounce? Um, hmm. Same date strike? Usually. If you can leverage a shorter dated CSP, right, then you're not on the hook for the theta on the short leg. So, like if you're writing a 25 CSP, and you're getting like $6 premium, right? And then you're leveraging that into like 3x Jan calls, right? But this is like an October 14, and this is Jan 23. That's great, right? Because the short leg's gone. Like, obviously you want enough time for the price to go up to 25. So consider that. It may not go up to 25 by the 14th. So that might be a factor, but other than that, yeah, it's fine. I'm not a big fan of that. Like going synthetic long in the money like that and leveraging your downside, but I mean if you're okay with buying the stock at $25, it's not so bad. What's your top 10 list of stocks to buy in a market crash? I'll tell you after I buy them. Thanks, Nuns with Guns. Please remind folks that things don't come easy or instant. Regarding Rev, we should assume no price action until the 45 days are up. Yeah, and here's the tricky part. Their announcement can be made at any point during those 45 days. Yeah, they backpedaled. Yeah, you can short PayPal. I think it's just like too obvious at this point. Maybe even that's a little risky, actually. Since they did backpedal, it's really cheap right now. I'm not really interested in it. Too much sentiment in the way. You don't know which way it's gonna swing. Institutions could be bullish that they pulled back, and who cares what retail investors think? You should cancel the stream that day if bad. No, I don't do that. I'll sit here and listen to all of it. If RevC is listed in the play, is the play short-term comparable or greater to the gamma flip point on Bobby before August? If it stays listed, it's very different. I mean, way more illiquid. So different volatility, not nearly as much price improvement potential, but volatility potential is way higher. Fubo is way safer than Revlon. But yeah, Rev has a higher short-term potential. Except Revlon isn't like, oh, it didn't do what I wanted, I'll sell it a loss. It's like Revlon's like, oh, it didn't do what I wanted, I lost everything. Right? Thank God we checked out those bio stocks. I really want more GME sub 20, but I'm not sure, barring a crash that we'll ever see it again. However, the moment I see 22, I'm buying and the stock will drop to 19. That sounds about right. I mean, I'm pretty confident that at some point I'll get another buy in like the 80 or sub 80 range. That the last time I bought GME was in March when it fell to that low. I didn't get assigned on CSPs in May, but I came kind of close. I would have bought there too. But yeah, I'm not buying outside of those lows though. Like GME for me at least, with my cost basis, basically GME above like 2166, I'm not buying it. And I'm probably not buying it
unless it's under 2005. I don't know if we need a market crash to see that though, right? If we follow the Jan the Jan trend and our liquidity looks like we are, there should be another short here after ETF FTDs, and this will be low. This will be into this range before OPEX. Or we run for October OPEX. But I don't think so right now. Are you still playing O? I'm out of O. My O got closed. I'll be back in it when it hits a price I'll buy it at. But yeah, I had a sell order on O, so no O for me. Like a standing sell order. I think O's probably gonna keep diving. So I bought O right after the COVID crash, like the majority of my position right after the COVID crash. Somewhere in like the $44 range. Uh and then I had a standing sell order that I placed like back in May. I want to say end of May for like $70. So when it peaked at like 73 or 74, and when it fell back to 70, I sold out. I'm not gonna buy back in yet. Not for several months at least. It sucks to lose the income every month, but can I be a Discord mod? No. Nice try, JFresh. It's because of the threats and statements you've made. Do you wanna hop on here and talk about Revlon and how shitty of a play it is? Maybe that way you can get your attention like assuaged for the week. Hey, it's Bipolar Bear. He's back and he doesn't have that stupid name anymore. All right, is that it? Are we done? I hope you guys get your exit pop next week. It'd be cool. I mean, that's all I'm banking on, right? I'm not banking on it like actually squeezing cuz nothing ever should, right? It could. There's a lot of things that could happen. It's very titillating. But, you know, it's just an IV play, right? And technically, 35s print whether the stock goes to 0 or the stock goes to 35. Like if IV goes to 500%, it doesn't really matter what direction the stock goes. Which older Pickles picks are you still bullish on? I mean, long term EPAM. I really like that company. Uh, DDS is always a fun play. Caterpillar's amazing. I mean, it's an old one, but it's always a good one. When it's a good one. The problem is, you can't make all your money for the year playing cat 3 times a year. When do the 45 days start with Rev? After October 13th. Do you have an IV target for the Rev exit? 300% being the highest so far. Actually, the highest IV on Rev was 477. Its IV spikes very, very rapidly. Thoughts on when the bear push capitulates? Seems to me that inflation has flattened off. The rates will still go up until it starts dropping, I would imagine. I think as long as CPI comes in moderate to even, we'll start to see the bear push capitulate. They're already, kind of running out of room, right? Like they don't have that much theta left on their positioning. Maybe even Friday, at least for the near term. Like I think we could see a bounce back into like the 3,700 range into Monday, and then obviously like Monday, Tuesday, and then Wednesday we have CPI, PPI, and Thursday CPI, and that'll probably determine our directionality for the rest of the week. But if those are even moderate, I think we're gonna get a good rally. Is Cat still a play? Absolutely, yeah. Cat's resilience to the market downturn is showing a slow shift into growth. I mean, Jesus, it's the market lost like 400 of the 600 points it gained, um, and Cat stayed like basically right at resistance the whole fucking time. Uh, I think Cat's probably decent for a move up to 200 in the next like 30 or 45 days. I might wait though to re-enter. Like I still have a lot of positioning in Caterpillar, but if I was gonna buy more, I'd probably wait till PPI. What's up, RPie Square? What's going on, man? Are you aware of any other pimento traders? The pimento is me trying to distill something complicated into a format where even Stefan can understand it without me explaining too much. But then, of course, he's going to try to overcomplicate it. You ever sell 0.05 CSPs on GME for small income too? No, because I'd rather make money than just, you know, your bank has a savings account. They might give you a $800 bonus for the year. The effect on current, I don't think they're going to back down from hitting the aggressive rate. I think they want to use the dollar to fuck global economies. It seems intentional, if nothing else. What better way to get the government to fund bringing a bunch of manufacturing back to the US than to incentivize it? Also, simultaneously, we get to cripple every other foreign economic power. Good stuff. For decades, maybe. We were losing ground to China. That was bad. Could oil price changes force them to change after OPEC plus Russia? Yeah, that could. I mean, if the war in Russia and or Ukraine um, pulls back, and I mean, OPEC only incentivizes them to keep doing what they're doing, but Russia pulling back could be a big change. I don't know. Maybe it'll just incentivize them to raise rates even higher without, without oil bumping up inflation. They'll feel a lot safer with their rate increases, right? Like if Russia's oil came back on the market, obviously the oil would tank. But I think what's going on in Russia right now is going to play out over probably a couple years. Are you still setting stops on your long-term SPX long position going into the CPI date? I'm worried about being whipsawed out of my position. No, I'm not setting stops. Why would I do that? My long position on SPX is bought and paid for, right? That's how that positioning is set up. So the worst thing that happens to me is I lose unrealized gains, right? But I don't lose any capital. Domestic civil unrest. They don't care about that in the US. That's what we have the National Guard for. Will you do a trading series with a fresh account from 10 to 50 to 100K like you talked about on Friday? Well, I was going to start it at 5K, I think. But I'm still thinking about it. It's something that's kind of like I'm gonna have to plan it out and see if it's something I want to do. How much does CPI need to drop this week? Like I said, if we get 1 or 2, it's probably going to be like if it's up 1 or 2 points, it'll probably be pretty bullish. If it's even or negative, it'll obviously be very bullish. I think 0.3 and higher, it starts to get bearish again. 5K, start by selling $18 Upstart CSPs. Well, I mean, not that I don't like those, but I probably would target something that I would want as a core position. I'm not sure if I'd want that to be Upstart if I'm trying to grow the account from 5K. Like that's a big risk, right? You can mix cooking with the small account during midday dulls. 5 million to 25 million challenge. Well, we'll see how good the small account does first, right? I don't like things like that because it incentivizes people to ghost me, which I always think is bad, whether you have visibility on the account or not. Um, and that's my main concern. It would be the reason I wouldn't do it. That's definitely not a fucking safe play at all. AMD, what can you afford that's worth holding under 50 a share? That's a good question. Probably like an ETF or something. I was thinking maybe financial sector, regional banking, something like that. Like it's not fun, right? But the leverage is good. I don't know if it's road to riches, but it's road to slightly more money than it started with. We'll see. I'll think. I gotta think about it. All right, guys, that's enough. I'm like 30 minutes over. I will see you all tomorrow. And Pickles picks out tonight, obviously. Congrats, you've made it to 2 hours. Thanks, Gordon Ramsay. Thank you guys so much. Yeah, I'll see you all bright and early tomorrow. Keep your eyes open for Pickles Picks. They'll be out tonight, probably after midnight. Thank you guys. Have a good night and a good rest of your weekend.